Good evening and welcome to the Iraqi Dinar News channel. Today is 2025, and once again the dinar conversation is dominating currency circles. A wave of new reports is sweeping through the financial community, and this time the focus is sharper than ever. Whispers of lower denominations being prepared, alongside claims that banks are updating systems for a possible revaluation, are fueling intense speculation. For many, these developments point to a moment Iraq watchers have been waiting for: a potential shift in the value of the dinar. Supporters see this as one of the most compelling signals yet that Iraq may be preparing for major currency reform. Critics, however, remain cautious, warning that without concrete announcements, this remains speculation. But one thing is certain: the discussion is heating up worldwide, and tonight, we break down exactly what's being said, why it matters, and what it could mean for the Iraqi economy and global markets. The discussion surrounding the Iraqi dinar is not new, but the nature of this latest round of reports is different. The talk of lower denominations, smaller value banknotes, has caught the attention of currency analysts, investors, and regional economists. Historically, a country only issues smaller bills if its currency is strong enough to require them in daily transactions. In Iraq's current market, where the dinar's value remains relatively low against the US dollar, a 5 or 10 dinar note would have little practical use. This is why the rumor is attracting so much attention. It suggests a significant shift in purchasing power. In parallel, there are claims that banks inside Iraq are updating their systems and training staff for potential rate changes. The combination of these two developments has intensified speculation that the long-discussed revaluation, often referred to as the RV, could be closer than ever before. Perhaps even within the year 2025. Lower denominations are more than 2%. Like lower denominations are more than just pieces of paper. They are a strategic move in monetary policy. When a central bank decides to print and circulate smaller bills, it typically signals confidence in the currency's strength and stability. In Iraq's case, this could mean that the central bank believes the dinar will have enough value to make these denominations practical for everyday use. For example, if the exchange rate moves closer to 1 dinar equaling 1 US dollar, or even a fraction of that value, then a 10 dinar note would be meaningful in daily transactions. This possibility is exactly what excites many in the investment community. They see it as a clear, tangible step toward a stronger currency. At the same time, economists point out that introducing new denominations is a complex process involving printing contracts, distribution plans, and public education campaigns, all of which take time to organize before any official change is announced. Adding to the intrigue are reports that Iraqi banks are quietly preparing for possible currency changes. According to the latest discussions in financial forums and private investment groups, some banks are said to be updating software systems that handle currency exchange rates, training tellers for high-volume transactions, and revising internal policies for handling foreign exchange. While no bank has made an official statement confirming these actions are linked to a revaluation, the idea that banks are ready is gaining momentum. This phrase alone, "banks ready for RV," has become a rallying cry among currency watchers. The reasoning is simple: if banks are upgrading and preparing behind the scenes, could mean they do not want to be caught off guard in the event of a sudden change. In such a scenario, even a few hours of delay could cause chaos, with lines of people rushing to exchange their currency at new rates. From a macroeconomic standpoint, Iraq's position in 2025 is far stronger than it was a decade ago. Oil revenues continue to form the backbone of the national economy, and with global energy prices remaining relatively stable, Iraq has maintained steady foreign currency reserves. The government has also taken gradual steps toward diversifying the economy, investing in infrastructure, agriculture, and digital finance initiatives. This broader stability could provide the foundation needed for a currency adjustment. Moreover, Iraq has engaged in increased trade partnerships both regionally and internationally, strengthening its role in the Middle East's economic network. For analysts, these conditions make the idea of a currency shift at least plausible. The introduction of lower denominations could be seen as a natural next step in a broader modernization of Iraq's financial system. Alongside improvements in banking technology and expansion of cashless payment options, still experienced economists caution against interpreting these signals as definitive proof of a revaluation. The history of the Iraqi dinar is filled with cycles of rumor and speculation that have not materialized into the large rate changes many predicted. In previous years, similar stories about lower denominations and bank readiness circulated widely, only to fade without official confirmation. Critics highlight that Iraq still faces challenges, including political disagreements, bureaucratic inefficiency, and corruption in certain sectors. These factors can slow down or derail even well-intentioned economic reforms. Central banks, by their nature, act cautiously and are unlikely to make sudden, dramatic changes without a comprehensive plan. As such, while the current rumors are interesting and worth monitoring, they remain unverified. This cautious approach is essential for maintaining credibility in the financial world, where premature moves could destabilize the market and erode public trust. Despite the warnings, the pace of conversation around the dinar in 2025 is noticeably faster than in prior years. Online discussion boards, investor groups, and currency-related communities are seeing a surge in activity. Many point to the timing of these new rumors as significant, given Iraq's ongoing push toward modernizing its banking infrastructure. Over the past 18 months, the country has rolled out several pilot programs to increase the use of digital payment platforms, reduce reliance on cash, and integrate more citizens into the formal financial system. These measures are seen as laying the groundwork for a currency that can function effectively both domestically and in global trade. The fact that lower denominations are being discussed in the same period raises questions about whether these developments are interconnected. Could Iraq be aligning its physical currency updates with digital and regulatory reforms to make a smooth transition to a higher value dinar? That is a question analysts are asking. Lower denominations in economic terms serve as a signal to both domestic and international markets. For the domestic population, they make daily transactions easier and more efficient, particularly in retail and small business environments. For international observers, the issuance of such bills often indicates a currency strong enough to support them without eroding their value. In Iraq's situation, the challenge is that the current exchange rate would make a 5 or 10 dinar note impractical, worth only a few cents in U.S. currency. Therefore, if such notes are printed and released, it could imply that the currency's value has increased or is expected to increase. This is why the lower denomination rumor is so powerful. It contains an inherent suggestion of revaluation. However, the process of releasing these notes would not be done overnight. Printing, contracts, security features, distribution schedules, and public awareness campaigns would all have to be in place, making this a significant undertaking for the central bank. The claim that banks are ready for a revaluation is equally compelling. Banking institutions play a critical role in the execution of any currency adjustment. From recalibrating ATMs and teller systems to adjusting accounting procedures and foreign exchange platforms, banks must be fully prepared before a revaluation can take place. If they are indeed in the process of upgrading systems, it could indicate that they are anticipating possible changes. In the case of Iraq, some reports suggest that staff training sessions are underway, focusing on high-volume cash handling and new exchange rate calculations. While these reports are unverified, they align with standard preparatory steps taken by financial institutions when expecting currency shifts. The key question is whether these preparations are routine updates or targeted actions linked specifically to a potential dinar revaluation. Without official statements from the central bank or Iraq's Ministry of Finance, the answer remains speculative, but the timing continues to attract attention. Globally, Iraq's economic position has been improving gradually. Oil remains its primary export, and with continued demand worldwide, the country has maintained a steady stream of foreign reserves. These reserves are crucial for supporting the value of a national currency in foreign exchange markets. In addition to oil revenues, Iraq has been working to stabilize its political environment and attract foreign investment. Infrastructure projects, international trade agreements, and participation in regional economic forums are steps that build credibility in the eyes of global markets. For a currency like the dinar to increase in value sustainably, it must be backed by strong fundamentals such as trade surplus, healthy reserves, and a diversified economy. The progress made so far does not guarantee a revaluation, but it creates a foundation upon which such a move could be built. It is this gradual strengthening that keeps the idea alive among those who closely watch Iraq's financial policies. Looking at past examples worldwide, currency reevaluations often follow a similar sequence of events. First comes the strengthening of the economy and the accumulation of foreign reserves. Then there is the introduction of smaller denominations or new currency designs to facilitate daily transactions at higher values. Next, banking systems are upgraded to handle the new rates, ensuring smooth conversion across ATMs, point-of-sale systems, and online platforms. Finally, an official announcement is made, often with only a short public notice to prevent market manipulation. Some investors believe Iraq is somewhere between the second and third steps in this sequence, citing the rumors of lower denominations and bank readiness as evidence. However, this remains a matter of interpretation. Governments and central banks rarely disclose precise timelines for such moves, preferring to act when conditions are optimal. That secrecy is intended to protect the stability of the currency during the transition process for everyday Iraqis. The potential revaluation carries both hope and uncertainty. On one hand, a stronger dinar would increase their purchasing power, allowing salaries and savings to stretch further. Imported goods would become more affordable, and travel abroad would be easier financially. On the other hand, rapid changes in currency value can also lead to short-term market instability, with businesses and consumers needing time to adjust to new pricing structures. This is why central banks often pair currency changes with public education campaigns, ensuring that citizens understand how to use new denominations and what the changes mean for their personal finances. In Iraq's case, the public's trust in the process would be critical. Past economic challenges have made some citizens skeptical of sudden changes. Ensuring transparency, even if timelines remain undisclosed, would help build the confidence necessary for a smooth transition. Internationally, Iraqi dinar's potential revaluation could have ripple effects in currency markets. Investors holding dinar as part of speculative portfolios would see immediate changes in the value of their holdings, potentially triggering shifts in related currency pairs. Regional trading partners would also be affected, especially those who do significant business with Iraq. A stronger dinar could alter trade balances, import costs, and export competitiveness across the Middle East. For global banks and financial institutions, the change would require updates to currency exchange systems, recalibration of pricing models, and adjustments to foreign reserve strategies. This is why even rumors of a revaluation can cause increased monitoring in financial hubs such as London, New York, and Dubai. Currency markets are highly sensitive to sudden shifts, and the Iraqi dinar, despite being a relatively minor currency in global volume, has the potential to make headlines if significant changes occur. Skeptics remain firm in their position that the latest developments do not necessarily point to an imminent revaluation. They argue that lower denominations could be introduced for reasons unrelated to currency value changes. For example, they could be part of a broader currency redesign to improve anti-counterfeiting measures or to align with updated security standards. Similarly, bank system upgrades could simply reflect routine modernization efforts, which are common in the global banking sector. These steps could be coincidental rather than coordinated to ward in RV skeptics. Also highlight that currency value is ultimately determined by a combination of economic strength, market confidence, and government policy, none of which can be shifted instantly without potential consequences. In their view, while the rumors are worth tracking, they should be treated with caution until there is direct confirmation from official Iraqi authorities. Supporters of the revaluation narrative countered that the alignment of these developments lower denominations, bank readiness, and broader economic stabilities too precise to be purely coincidental. They note that Iraq has been engaged in a long-term process of economic reform since the early 2000s. With gradual but steady improvements in infrastructure, banking regulations, and foreign trade. These reforms have taken time, but the cumulative effect is now visible. Proponents argue that the country may finally be in a position to take the next step toward aligning the dinar with its perceived fair market value. They see 2025 as an ideal moment, given global market conditions, Iraq's oil revenue stability, and its improved diplomatic relationships. For them, the combination of these factors makes the possibility of a revaluation more realistic now than in previous cycles of speculation. For currency analysts, the technical aspects of any potential dinar revaluation are as important as the political and economic factors. Adjusting an exchange rate significantly requires coordination between the Central Bank of Iraq, commercial banks, foreign exchange markets, and international financial organizations. It also demands that the new rate be sustainable over the long term, supported by real economic performance rather than short-term market expectations. If Iraq were to revalue the dinar without sufficient reserves or economic productivity, it could face inflationary pressures or currency instability. This is why, despite the growing excitement, professional analysts remain focused on underlying fundamentals such as GDP growth, foreign investment inflows, trade balance, and fiscal policy discipline. In their view, a revaluation will only be successful if it reflects Iraq's actual economic capacity rather than just investor enthusiasm. The psychological impact of a revaluation, even strong rumors of one, should not be underestimated. For many Iraqis and foreign investors, the dinar represents more than just a medium of exchange. It is a symbol of national progress, economic independence, and the possibility of improved living standards. Each new development in this story rekindles old hopes, especially among those who have held dinar for years, waiting for a change. Social media amplifies this sentiment, spreading news, opinions, and sometimes misinformation at high speed. In this environment, even small, unconfirmed details can take on outsized significance. This can lead to both increased optimism and heightened risk of disappointment. Managing public expectations, therefore, becomes an important part of any genuine revaluation process. The central bank's ability to control the narrative will be key to avoiding unnecessary tease, market volatility, and maintaining stability during any transition. If lower denominations are indeed introduced, one of the first signs will likely be images of the new notes appearing online. In the digital age, such images can spread globally within hours, sparking instant debate and analysis. Currency experts will scrutinize the design, security features, and denominations to assess what they reveal about potential value changes. Banks and currency exchange services would then need to prepare for public demand, which could rise sharply if people believe a revaluation is imminent. This is where the phrase "banks ready" takes on its full meaning. Institutions would need to ensure they have the liquidity, systems, and trained personnel to manage sudden spikes in transaction volume. Without this preparation, even a well-planned revaluation could encounter operational difficulties that undermine public confidence in the process. From a geopolitical perspective, Iraq's currency strength is also tied to its role in regional stability. A stronger dinar could enhance Iraq's influence in Middle Eastern economic negotiations, making it a more attractive partner for trade and investment. It could also encourage greater integration into international financial systems, improving access to global capital markets. However, this influence would come with increased responsibility. Iraq would need to maintain disciplined fiscal policies, protect against inflation, and ensure that its economic growth benefits a broad segment of the population. Failure to do so could lead to renewed instability, which in turn could weaken the currency. This is why experts stress that a revaluation, if it happens, must be part of a larger, long-term economic strategy rather than a standalone event driven by short-term considerations. In summary, the current conversation around the Iraqi dinar in 2025 revolves around two main points: the possible introduction of lower denominations and the readiness of banks for a potential revaluation. Both developments, if true, would mark significant steps in the evolution of Iraq's currency policy. However, without official confirmation, they remain in the realm of speculation. The underlying economic conditions, steady oil revenues, growing foreign reserves, and gradual reforms provide some support for the idea that a shift could occur, yet the risks, challenges, and uncertainties remain substantial. For investors, the prudent approach is to stay informed, monitor official channels, and avoid making decisions based solely on unverified reports. For Iraq, the path forward will require balancing ambition with stability, ensuring that any changes to the dinar's value are sustainable and beneficial in the long term. As the year progresses, all eyes will remain on Iraq's central banking government for signs of official movement. Whether the rumors materialize into a formal announcement or fade into the background once again, the story of the Iraqi dinar continues to capture global attention. Lower denominations and bank readiness are compelling indicators, but the true test will be in hand when policy changes are implemented. For now, the financial community remains watchful, analyzing every hint and update for clues. In the high-stakes world of currency valuation, timing is everything. And Iraq's decisions in the months ahead could have lasting consequences for its economy and for those who hold the dinar. Until then, the conversation will continue, fueled by equal parts hope and caution. As the possibility of a 2025 shift in Iraq's currency value remains on the table,